All right, before I get started with my thank yous and everything and whatnot, here's my disclaimer and forward-looking statement for this Planet MicroCap podcast live in Austin at the MicroCap Rodeo. All information presented in all forums at the Planet MicroCap podcast live in Austin is for informational purposes only and should not be construed as an offer for solicitation of an offer to buy or sell securities. Stock News Now, SNN Inc. and Planet MicroCap podcast and their representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. Any presentation or panel is for informational purposes only, and we do not recommend any company. A company's actual results could differ materially from those described in any forward-looking statements or presentations at our conference or at this conference. Information within presentations or communications may contain forward-looking statements. Forward-looking statements are based upon expectations, estimates, and projections at the time the statements are made and involve risks and uncertainties that could cause actual events to differ materially from those anticipated. Forward-looking statements may be identified through the use of words such as expects, will, anticipates, estimates, believes, or by statements indicating certain actions may, could, should, or might occur. I promise. Almost done. Almost done.
You sound like one of those pharmaceutical commercials.
Wait, is that my second career? Hold on. Okay.
What are you going to sell us?
Almost done. I promise. Almost done. We do not engage in providing advice, making recommendations, issuing reports, or furnishing analyses on any of the securities, strategies, or information presented. We may buy and sell shares in any company mentioned and may profit in those events. In the event those shares rise in value, there are risks involved in any investment. We are not analysts. Investing in securities is for individuals with high risk tolerance and not for the general public. We recommend you consult with a professional advisor, investment advisor, broker, or legal counsel before purchasing or selling any securities referenced during any or at this conference or in press releases, videos, emails, or listed on our website, stocknewsnow.com, or our podcast. Now let's give me a round of applause for that. That was pretty good. All right. So, without,
I want to start out by saying,
and everybody, that was the longest photo.
Bobby, you promised me ringers, dude. You promised me like the Raven, Mackie, Brock. You bring these two half low cheese? What the hell, man?
Listen,
This is hurting my brand.
And you're wearing the brown shirt. And you're wearing your brown shirt.
Yeah.
Okay.
Thanks, Maj.
Okay.
Well, with that said, everybody, all right. So I'd like to welcome everybody to this Planet MicroCap podcast live in Austin. I'd really love to thank the hosts of this event, Wiley, Rod, Evan, and the entire Issuer Direct team for helping making this all possible, as well as for helping with recording of this. So we do thank everybody for having us here and doing this today. And now yes. And so I'd also like to now introduce our podcast panel, and you probably recognize these three gentlemen as they're the three who I've interviewed probably the most, both on the podcast and also in video interviews. So I promise you we have no rapport whatsoever.
Maria Bartiromo.
So
no 60 minutes.
The 2 o'clock in the morning call.
So as you probably guessed, here are our guests here. First, I'd like to introduce Sam Namiri from Ridgewood Investments.
You stayed at a Holiday Inn Express last night?
I'm a genius.
we got Chris Lahiji from LD Micro.
That's right, baby. Hey, thanks a lot to that guy who didn't clap for me, dude.
and we got Maj Soueidan from geoinvesting.com.
Thank you.
All right. So, like we always do with every podcast and live event, we want to start with everyone's background and how you got to where you're at today. Let's keep it brief. You know what I'm saying? Sam, we're starting with you.
I'll keep it brief. I founded a jewelry company while I was in college at Berkeley. So I have, unlike most people who sit on this side of the table typically, I have operating experience running a real business.
Yeah, operating a shitty business.
You learn a lot operating a shitty business. And then I went to business school and joined a small cap hedge fund out in New York City. And now I run Ridgewood's small and microcap portfolio. So
cool.
That's the basics.
And I got to say, he's a very capable, intelligent man. I mean, that's the only truth that you'll hear from me today.
Wow.
It was so hard. It was so hard saying.
I'm glad you got that out of the way.
So look, I mean, I think Austin is a bittersweet place for me because my destiny was to go to the University of Texas at Austin. I'm originally from Fort Worth, Texas. I love the state. It's just, what's painful is that if I actually went to UT, I would be a very successful entrepreneur and wouldn't be stuck in MicroCap purgatory. So it's kind of sad. I'm going to go to campus later in the evening and just cry a tear or two. But for me, I've always had this incredible love, passion, adornment for small companies. I've always been fascinated by the fact that someone can own, just 1 or 2 shares and still be a part owner in a business. And I really, for whatever reason, found that I loved really focusing on companies that were small that have the potential of becoming a lot larger. So that's why I'm seated at this table today, and I'm honored to be here.
Awesome. Thank you, Chris. Maj?
Thanks, Chris.
Thanks. You're welcome.
Well, my story isn't quite as awesome. I mean, just been an investor really pretty much all my life. My dad really got me into investing when I was. He was back maybe like in the mid '80s. You see him investing all the time and kind of get interested in it. I watched some of the stock reports with him. And 11th grade, I played a little investment contest, lost all my money, fake money, and so this is where I got to go. And
let's say, Maj, this is very important to mention. At your last session in Vegas, I think that was back in April,
yeah,
he picked a stock that actually has gone up.
No, actually, more than one. That's gone up. More.
It's shocking, but I don't know what the color green looks like, but this guy was spot on. It was REPR, right?
And RWBI.
Wow.
I'm sorry. So,
And for full disclosure, are we still shareholders in the
yes.
Okay. All right.
Yes, I am.
Oh,
Yeah.
I forgot about that.
It's all good. All right, so moving on real quick. We've done a lot of interviews. Some of our audience knows your investing style, but briefly, what's your investment philosophy, and very briefly as to what you look for in a potential new investment. Maj, I'm going to come right back to you.
Yeah, well, that's that's a tough question. You get it all the time. You think, how do you answer that question? But I'm pretty agnostic. I look at things as scenarios, and I'll invest in anything from the typical, I guess, undervalued, clean company, to really, fun, speculative turnaround plays, special situation plays. I think it's all about developing, as you go through investing, developing a journal of scenarios so you recognize them and not pigeonholing yourself into one scenario. Sometimes ugly is awesome. Ugly turning beautiful if you can figure that out, which is great. And as markets become more efficient, I found that actually to be a real enjoyable part of what I try and do, is find those stocks everyone's ignoring right now that they will love maybe in 2, 3, 4, 5 years. 50 years, I don't know.
That's a tried and true microcap investor right there.
Yeah.
Eloquently said.
Oh, yeah.
Yeah.
Chris?
I think Maj said it best. I think the way we look at it is on a case-by-case basis. We tend to be focused more on deep value than growth. And we really like to focus on areas that we have had historical success. So special situations, broad-based insider buying, and just buying things that have been completely discarded for all the wrong reasons. I've lost a lot of money kind of leaving that behind, but my general take is you want to look at things on a company by company basis.
Cool. I was going to say, even though you didn't go to UT, I think you got your degree plenty with all the money you might have lost.
I have a PhD in losing money in microcap. Don't know when I'm going to get back.
That's the best education right there.
Except with money losing.
Yes.
And Sam, your investing style?
I like to buy good businesses at attractive valuations, and everyone says they're long-term investors, and I think it's easier said than done. But I typically look out at least usually an 18 to 24 month time horizon.
Yeah, Maj's long term is 3 to 6 weeks.
Actually, 13 years. I'm glad that came up.
I don't think Sam is telling us where he's going to go later this evening, but I think to keep our friendship intact, I won't tell anyone.
Okay.
So, in 2019, there's been some interesting news that could affect microcaps. From the SEC new risk factor emission proposal to NASDAQ's new listing standard proposals. I wanted to get some of your thoughts on the structural proposals that are out there. Maj, I know you've been covering this quite a bit on geo investing, so let's start with you. What can you kind of go over? What some of these proposals are discussing?
Yeah, I think with the SEC, this came out recently, I think, and Chris, you probably saw this.
Oh, absolutely.
Yeah, So it's funny. The SEC is trying to make it easier for companies, or more affordable for companies to list and make it easier to go through the filing process. And part of that is basically kind of making it giving management more latitude in some of the risk factors that they disclose in their filings. I thought that was really weird, and because of how much more, in my opinion, and I think how much fraud there is out there, manipulation has been in the last several years, since 2008. And one of the things I thought was interesting, so there was that they have this statement where they say, okay, well, they're changing it from, the statement is from something like meaningful to material. If the risk factor is meaningfully significant, I think that was the actual kind of bar now. Now it's if it's material. Well, what does that mean? And it just becomes, again, what regulatory authorities are doing is just making it obscure and kind of weird. And so I know from my personal investing experience that the risk factors are where I find a lot of the dirt. And from eventually being on the short side for a little bit, we're actually publishing a report tomorrow, by the way, based on based on risk factors.
Right.
And I would hate to see investors get hurt, retail investors get hurt, and even institutional investors not understanding the company of risk factors.
So they're basically, the SEC proposal is basically saying that management teams don't have to include as many risk factors that they previously were?
Well, it's unclear.
It's unclear.
Maybe they're going to define what is boilerplate. I'm not sure. The SEC stand on it is they think they'll get better disclosures. So maybe I'm overreacting to it. Maybe they'll have more on it. But
so I'm curious, brother, because I got a lot of email on this weekend. How many people are for it, and how many people are against it? Or do we have a consensus on this?
We don't have a consensus. I don't think it's. I think it's still like in an early stage. I mean, I have the thing right here. Let me see.
Well, here's my piece of insight. This is one of the few things where I still don't know which way I'm leaning. Okay, because all the information is still not out, and reading is just so 20th century. I like to make instinctual moves.
Hold on, I got to give you a marker for that. Hold on.
Yeah. So reading is for people.
Yeah,
But look, let's look at the MicroCap universe. So LD Micro tracks the entire North American universe. There's 12,000 companies. Okay, there's 12,300 something. How many of these do you think do not report, or let's make it more eloquent, do not give a shit in letting people know how the business is, who the shareholders are, what the board decides? It's an overwhelming majority. So it's just like the solar system, where there's a star and a planet here and there, but for the most part, it's just basically darkness. So I don't know whether this is meant to address all that dark matter or darkness, if you will. But like most things that the SEC does,
right?
There's always this varying degree of grayness, where it's like everything is subject to interpretation. But what I do know is that this whatever this rule change is, has caused a lot of investors that literally come out of their shells once every 10 to 12 years. People really the quiet investors that you don't hear anything about. This is an outrage, It's like, I've been living in my cave for 10, 15 years with peace, and now you're taking, the 5 or 6 nuts that I've been able to assemble or accumulate.
Wait, Chris, are you talking about that proposal, or are you also talking about the one to halt the trading of all dark stocks? Or which one?
Ooh, yeah.
Because I just published a video about that today.
I'm talking about the collective.
Yeah.
So what I think the SEC is trying to do is they're trying to shed light on the fact that there are 80% of the companies in MicroCap, maybe even greater, you don't even know what the hell's going on. So what is the point of existence? And according to some, including someone that's very close to me, this is a bad step in the wrong direction.
Yeah. I mean, I think we can all agree probably that the SEC has the best intentions in mind here, trying to get rid of fraud and right.
Yeah.
I think we can all probably agree on that. But at the same time, it's always that, all right, well, what's the right way to do this? How do you verify the ones that are, real businesses versus the ones that are just shells?
I just feel that in the end, anything that makes it harder for an investor to deploy capital is net negative.
Right. I mean, when they say this, Chris, I mean, they should result in improved disclosure and elimination of necessary costs and burdens. How is? What do you think? What do you think they're thinking?
That's the exact antithesis of what they're proposing.
Does any?
Like,
I mean,
I want to be your friend, and I'm stealing your phone. Okay, that doesn't sound like an act of friendship to me.
right.
So, but look, again, I'm assuming, and I'm hoping that this is not like one of these things where it's like, we're going to turn off the lights in 5 minutes, okay? And then in 5 minutes they just show up. But I hope that that they will allow some extra time to kind of figure out and maybe clarify their position a little bit better.
Right. So Sam, I also want to get your opinion on this. You know, you've read some of these proposals as well. You know, what do you think? I mean, how would this affect you and your investment philosophy?
I don't think it would affect my investment, but it's kind of like, what is the outcome of all this stuff happening? And I mean, the other trend that's been going on is a lot of brokerage houses aren't letting you trade microcaps as easily as they used to. And I think this could snowball into making it even more risky for brokerages to do that if there is more fraud and thus even less access. So they're effectively making more companies, I think as unintended consequences of more companies going private in this situation, too small, than the affect what they're actually trying to do with this proposal, right? Which is
Or they might do nothing. I mean, do they have to even go private if
but
it's
more
ultimate?
and more, it's harder and harder to like actually like own microcap stocks, and the risk level again. Like I think the bigger issue here is that if you invest in a private company, you're stuck. You have no liquidity. If you need money for anything else, you can't go and force them to sell your shares, you know, or get out. And so a lot of people have been kind of jaded by the private valuations that have gone on in the last like decade or so, where you don't need to be public as a company, but as an investor, like you don't think about like, oh, I have money now to invest, but what if like a year later something happens in my life and I need to take that money out? And so that's the huge benefit of public company investing, that, you know, again,
it's liquid.
It's liquid, right?
Supposed to be liquid.
And so you want to have that. At least you have some liquidity. Even microcaps have less liquidity, but you have some. If you're patient to some degree, like if you have a few months, depending on the stock, you know, you can get out of a pretty decent sized position. So,
I mean, do you think really it comes down to just this is not a question we talked about on the call, so I'm throwing this out there. But as a follow up to that, I mean, maybe it just is required to maybe actually ask the question: should we relook at the definition of penny stock or microcap? Because that could possibly change it up. I mean, I don't know. What do you guys think about that? Who knows? Maybe. Chris.
I mean, penny stock has
it's
a
just
negative connotation to it.
You're $4.50, you're penny stock.
Let me put it this way. I got invited to like this really high-end party. I couldn't even believe it. Like all the powers of the East Bay. Really successful people, good-looking people. Nothing that I would have in common with. Okay? And literally, this was like the most bone-dry crowd ever. And one of them asked what I do for a living. And the guy says, oh, Chris is a penny stock peddler. And that was the biggest joke of the night. You had 80-year-old women that looked like Queen Elizabeth going like, it was terrible. So look, I mean, we had a panel saying who is trying to kill microcap. Someone is, and they're really good. Look, I read this. Look at this. An SEC spokeswoman declined to provide a breakdown of the commission's vote to propose the rule change. Aren't they the U.S. government? Shouldn't things be as transparent as possible? I just have a feeling that, look, everyone talks about small business again and small companies, public, private, whatever, and yet nothing really happens to incentivize people to either build them or invest in them. And this is another one where I think it's a toss-up because we don't know exactly how this is going to be implemented, but it just doesn't smell good. You know, like if I'm thinking about going into a restaurant and it smells bad, about 80% of my decision is made. I'm not going there. I'm going to a safe choice. I'm going to McDonald's.
hey, but realistically, like you mentioned earlier, like who actually reads this? Right?
Maj does.
Maj does.
At least one of us does.
I generally go through it, but again, most investors in microcap land don't read it. So the fact that you have those risk disclosures in there, like, I don't know, protects the company just in case all these things happen. So it kind of allows them like leeway to do.
Brother, if I'm leaning towards something, I say don't change it. Just leave it as is. Let's come back to the discussion board and see if there's a way that, again, you can. Listen, I think the SEC is doing an admirable job fighting fraud and malfeasance and things like that. There is a definite purpose for this government entity, 100%. But I also feel like they don't really understand, the vibrancy of MicroCap as well. The fact that there's a universe, there's a planet like ours, where people genuinely want to invest and make these small companies bigger.
Mm-hmm.
They have to see both sides of the coin.
Mm-hmm.
Because think about this. All they're doing is they're looking at they're investigating bad people. But no good deed ever gets amplified. So I just have this weird inclination that I think they should have more of an outreach towards guys like Maj and Sam who do this for a living.
Mm-hmm.
I think the level of insight that these guys can provide is significantly greater. So again, it's just I don't know all the specifics, but I just feel like they should just kind of leave it as is until there's more clarity on what the ramifications of this are in the years ahead.
I think you made a great point. I don't think they understand what we do. They don't understand the market we play in over here, or maybe in general. When you look at things from, making money from their point of view, collecting fees and these kind of things. You don't look at it from how we invest and how an investor, invests.
They don't think that there's anyone crazy enough to do what we do.
Yeah.
But Maj, you're 100% correct. I think it would be, and I think they're doing it too. They're doing more outreach, and there's several people that we're close with that they've already invited, and they're giving them their God honest opinions. But again, something like this, and what's weird about it just comes out of nowhere.
I know where,
yeah. What ultimately, it's like, yes, we need to fight crime and malfeasance in financial services. Oh yeah, let's look at that old arcane law that really impacts companies that don't really
it goes from roundtable to proposal very quickly.
And then they don't disclose the vote.
Yeah.
So you don't know who was for it and against it.
Yeah.
So again, it's one of those great moves where it's like, Chris, we don't want to come to the conference. How come? Because it was a board level decision. Oh, okay. I'm going to substantiate that. So look, if you're going to do something, at least give us some insight as to who's voting for it and what their reasons are. I just have a weird way that these things are done in a way where whatever the vote is, that's that, and there's no rebuttal.
Right. And to be fair, they haven't singled out MicroCaps in this thing. They're just making it in general. But
right.
This to me thinks a situation like the NASDAQ, the regulators, they know that we have a problem right now with quality companies coming public, or not enough companies coming public. Mm-hmm. And this is just one way to make it easier for that to happen potentially, which isn't the best thing for investors maybe. Yes. Mm-hmm. And then that's what this thinks of to me, or sounds like.
New guidelines.
Right.
I'm actually somewhat okay with it. Thinking about it a little bit more. I think that if you put a disclosure in a document, it doesn't really matter whether someone's going to do something unethical or wrong, in my opinion. And if it makes it cheaper for companies to be public, which I don't know if it necessarily does, but if it can, I'm all for it. Have more public.
I think Sam is wired.
Maj?
Let me give you one example here, and
okay.
Maybe you still agree with this. So, for a period of time, geo-investing was very proficient in shorting China fraud and writing reports about that. And a lot of the stuff we found was buried in the risk factors. And there was one instance where one of the companies that we came across and we exposed, which was eventually delisted, and eventually, I'm not sure if they're still trading at all. But there was a risk factor in the report. We caught the very last second of the report. We did all our on-the-ground due diligence in China. We found out there was lying. It was about an acquisition. The company is a chicken farmer, Yui International. Remember them? Wow,
are we
the
still,
largest?
Maj, real quick for full disclosure, are
no
we?
way in hell he's still.
No.
Zero.
I wish I did because it's like
just like I'm a brown.
Yeah.
Those don't even exist anymore.
So we were trying to prove that the money the company had claimed to acquire this chicken farm in China with really didn't go to do that, and we had proved that with all this on-the-ground due diligence. But then we put it all together there was a risk factor basically saying that, yeah, once in a while the chairman will take money from the company's account, put it in his own bank account.
Yeah.
Oh, just
That's a pretty significant risk
From time to
factor.
time.
I can't believe they put it in there, and I can't believe even the Grant Thornton let it happen.
That's why LD Micro exists.
Do you want to?
My point is, he would have done that anyway, whether it was in the risk factors or
exactly.
not. And you found it out.
They were just
Yeah,
being
well-
honorable thieves.
He was doing it because he had to, probably. You know, and the way that was explained in the report, in the final was, well, this is it material or not? Everybody in China, we do this a lot. So if the SEC said, okay, you don't have to put material things, then maybe this is the material, because everyone, this is how we operate in China. You know, and that's just one example of a situation. Oh, what if you don't have your license? You know, or what if you which a lot of these companies don't have.
Why can't we just have a Kickstarter for stocks?
And it's usually like
Wasn't
China.
that called
I don't know if
Reggae
U.S.
Plus,
companies.
I think?
Wait, if it's a good idea, no one buys any stock.
He makes a good.
If it's a good idea, you set a market.
Well, Chris, wasn't that Reggae Plus? And I'm not in half jesting, I guess.
Yeah. But the problem with Reggae Plus is all the companies that ultimately went Reggae Plus, none of them actually made money for investors.
No.
What do I always tell you guys? The greatest thing that can happen in this business is massive winners, okay? And there hasn't been many. There hasn't. So look, I just don't feel like this is, personally, it's much ado about nothing at this point, but I still really want to see what was the cause and effect of them changing this.
Well, let me tell you, in that example, Maj, that's you bring that up because.
And that was China too, by the way. It was a China, yeah.
Well, I guess my question would be like, if you hadn't found that risk factor, and let's say it met all your criteria as a potential long investment, would that risk factor basically resulted in a loss? If it ultimately, because I don't know the company, but I would assume that the company's not around anymore.
Yeah, that was I think in the end it ended up being the overriding factor. For the SEC regulators to believe what because they actually made it on the conference call.
Oh, I see.
And then they halted the stock right away.
Were there actually chickens on this farm?
Well, they went public because they were legit. And when they first came, they had chicken. We had our guy take a taxi to the place. This is real funny about it. I'll let it go. Our investigator in China.
Why people tune in, right?
he gets in the taxi cab, right? On his way to this freaking village. And it just so happens to be that the driver of the taxi cab knew or was related to the company that Yui said they had bought. And he goes, no, they never bought that company. He goes, we made a U-turn and go to the other place, to talk to the guy they said he acquired. Now they're going back, or they never. They came to us, they asked us to go along with this little ruse, to say we did it, and so that was how that actually happened.
Why is it that taxi drivers always, give the information the best short? It's always a taxi
but to your point,
Uber drivers.
I think management teams, like honest management teams, will do a good job of disclosing what they have to disclose. It just comes down to that, and I think in the U.S., I'm actually surprised at the amount of risk factors a lot of companies do put out there. So I think it's a little overboard for us to assume that a lot of these companies are going to intentionally leave things out. Mm-hmm. I just think what it does, it just makes it a fertile ground for those that would do that would be fraudulent, to do that maybe.
But in that situation, that's fraudulent to me, whether there's a risk factor or not. Right?
Correct.
So like if you invest in a private business, if one of the owners goes and takes money out of the business and puts it in their own bank account,
100%.
You're like he's going to do it anyway. He's going to do it, right? Like you're saying, yeah.
And so that's part of like. When I visit companies and I talk to them, I say, how does the money flow? Who has control over, like once you get $1 of revenue in the business, who has control over the accounts? Like who actually can make big sales? Who can authorize large sales of a company?
No, but now you're giving a choice though, kind of thing, right? I think it's a little.
Yeah, but I mean that helps you weed out like you when you're on the ground in China, like doing research. That helps you weed things out, regardless of whatever they file in their risk factors. It
sure.
doesn't really matter.
Yeah. You want to go beyond that, obviously.
The man that should be seated next to me.
All right, guys. So I actually want to change topics real quick because this is something that.
Thank the Lord.
What about the NASDAQ?
Listen, I know we can do a whole podcast on China and NASDAQ proposal, but about a couple weeks ago, Planet Money just came out with an episode talking about the WeWork. I call it the fail PO.
Oh my God. We really have to go through this?
Oh, we're going through it. And for full disclosure, I do not own any shares in WeWork, and I'm assuming.
Yeah, because if you did, I would force you to sell it right now. Back to SoftBank.
So actually, and really with this whole debacle, you know, and how SoftBank basically created an infrastructure for private companies really to stay private longer, you know, and having less of a need to go to the public markets to raise capital. You know, so I really want to get everyone's take on this and what happened here and just, you know, why does this keep happening? Why does Silicon Valley keep thinking that, you know, you want to just put ungodly amounts of money in some of these companies that ultimately don't have a proven business model?
Well, look what happened in 2000 with all those .com piece of shits. Okay, it's the same thing. You could take a look. Let's start with WeWork. And I may be a moron. It's quite possible that I am. Okay, I still don't know what they do, and I still don't know how they make money. Okay, so that should be a red flag right there. Okay, for the 10th time, what does WeWork do? Oh, okay.
They sublease office space.
Yeah, they don't. Yeah.
And what they do is pretty simple. How they make money.
There it is.
That's the harder
There
part.
it is.
You know?
That's the one. That's the one. Okay, yeah. No, listen. Let me paraphrase. I don't know how this would make you any money. Okay, that's more articulate. Okay, I think the model is flawed. Okay, but then again, this is what happens when someone takes an idea and puts so much hype and hysteria behind it. You have something like this. Uber is the same thing. You can't convince me that Uber can make money mathematically based off the structure it has right now. You cannot convince me.
They can't.
They cannot.
Well, let me.
Okay, but it's still worth $50 billion. So this was just one of those things where there is just so much smoke and debris. They're like, you know what? Maybe we'll just back off a little bit. Masayoshi's son, man, the guy's, dude, Alibaba, that is the dream of dreams. Okay, he can afford to play with house money. This is just about saving face right now.
Yep.
So he thought he was gonna get, my name tag is stuck to this chair. This is great. It probably has a compass inside too. But the consensus is that I think it was too little, too late.
Let me. The main reason I really asked this because for me, I saw this as a potential catalyst for better quality companies to go public early. Bear with me on this. I know you're making a face. Bear with me on this one. My thinking is that because there's been these private equity firms willing to put so much money at these crazy valuations while these companies are so early in their stage and driving up the valuation, they don't have a need really to go to public markets to raise capital. So if we keep seeing deals like this just kind of fall through and there's really no exit because once they do go to the public market, it doesn't fulfill that valuation. I mean, is there now a potential that more of these better quality businesses might go public earlier than, it might be a stretch. It's only because we talk so much about how much we want better quality businesses to go public earlier and be microcaps and be those big monsters that we want. But I mean, I don't know. What do you guys think? Sam?
I think it helps, for sure.
It helps.
Definitely. And like it's kind of the kiss of death in venture capital when one of your portfolio companies has a down round. So I can think of one off the top of my head, a company recently that, a public company that acquired a private company that was about to have a down round. And so they were like, nope, this is our exit. Let's get out, by not IPOing, but by being acquired by a public company. So, but I think bigger picture of why these companies are, why these venture capital firms are paying so much in these huge valuations is kind of like what Chris said earlier. It's like the best thing that can happen to microcaps are to have big winners. And there have been big winners here. So when you see the Facebooks and Googles of the past or whatever, that have been big winners, these other VCs, it becomes a herd mentality, right? Where it's like we want to find the next big winner, and we're gonna be in it until the IPOs once it hits the $50 billion valuation.
And the media hypes it up. That's the only thing financial news media talks about is all these hot companies because they want to have something to discuss. But I think I think it's going to be a very painful lesson for a lot of people. It's just bad money chasing bad.
It really is, yeah.
And look, it's like musical chairs. As long as it's there, they're going to keep doing it. But I think that WeWork is probably going to be kind of that stake in the ground.
Yeah.
Where it's like you have to
We
pass
see the
that
paradigm
sniff-
shift,
You
yeah.
have to pass the sniff test. A lot of people like to shit on Zoom. Zoom is a real business. It's growing almost triple digits. It's profitable. Okay, it's not their responsibility that the company's worth $25 billion, but at least it's an investable idea. I don't
Chris,
see a lot of that.
full disclosure.
I don't know.
Okay.
Dude, I mean, it's $26 billion too expensive for me.
Yeah.
But that's the thing. I mean,
Right.
there will be IPOs, and there will be. Look at InMode, and for full disclosure purposes, INMD. That's the company that I own.
Israeli company?
Yeah, Israeli company, based out of Irvine. They're North American quarters, profitable, growing in the market segment. You know, have very happy customers, both on the clientele side and the people that use it. Stock came public at $15, $60 a share, and no one cared. Okay, went up to 30 because people saw the writing on the wall. It was a real business that was growing and was very profitable. So, like I said, I think there's going to be less WeWorks down the road, and it's going to hurt the media from having something to talk about. But I think it's going to be better as a collective whole as an investor because you'll have things that you can actually make money in.
Maj, what do you think?
Yeah, I agree with everything you said. I think to the extent that you have less money chasing these WeWorks and these pie in the sky kind of dreams, you'll have more money available maybe to go and if money starts going back into these higher quality companies, maybe we'll start seeing, and because that will start working again, and the WeWorks won't, you know, the market will take us, maybe bring back some quality. I guess that makes sense.
I just one comment that I see a lot in microcap companies. I see similarities in WeWork is that WeWork gets grouped in as like a technology company, and I see microcap companies a lot that think like they should get valued like a technology company, but they're not truly a technology company.
LD is a technology company. Come on.
So like, also I just want to say full disclosure, I do not own Uber. We mentioned that.
Oh, yeah.
So.
Good.
Well, you know, another big point that came out of this podcast episode that was talking about the debacle also as well was the power of founder CEO versus the investor, and how there was that paradigm shift where these founder CEOs could kind of just, because there's the SoftBanks out there, they could really just name how much they need, and then SoftBank will give them 10x, whatever that is, right? You know, so with this, could this be that paradigm shift where you're seeing now the power going back to the investor, where investors are saying like, listen, we want profitable businesses. You're not you know what I mean?
I think super voting shares are such bullshit, okay? To give the guys in control full power as to making a final decision. Don't go public if you have super voting shares, okay? Because it's never going to be an equal playing field. I don't care what you tell me. It's like we're in unison. The investors and the executives are all on the same bus. No, you're not.
Yeah.
So I mean, and look, the reason why they're super voting shares is because they can get away with it. Because the investment banks see there's so much money that could be made on these deals. Like you could have those shares. We don't care. We just want to do the deal because I want a $10 billion bonus at the end of Q4.
Right.
So hopefully that will change. But again, to the really, really popular companies, like let's say for example, In-N-Out Burger, if they wanted to go public, I'm pretty sure they can get away with super voting shares for the family. You know, but in terms of doing it, I don't think it's a good idea long term.
Got it. And for full disclosure, In-N-Out?
Full disclosure, I would love to own In-N-Out Burger. I would love to own it. The family's not
Just the whole business. I would personally.
I would love to just own it. I would just love to own an In-N-Out Burger. Just one.
Just nonstop
location.
burgers.
One location. I don't think I ever have to do this again. What other crappy companies did I talk about?
You mentioned them all. You're good.
Okay. Yeah. I'll do micro full disclosure purposes. I own shares in my.
All right. So I
Full
actually
disclosure, I'm short. I'll leave
Yeah,
my
that's probably a more profitable trade.
All right, so I want to get to our next topic here, and that has to do with the news about Charles Schwab and other online brokerage houses ending commissions on stock trading. You know, so this is a big hot button topic.
Oh, boy.
But you know, the thing is, this is actually not new. I mean, Robinhood's been around for a while. You know, so what do you guys think? I mean, how does this affect both sides, both the retail investor and then also now these businesses built on commission?
I'm gonna let these guys take over.
No, well, I'm going to Maj. Don't
Oh, okay.
Thanks for letting us take over, Chris.
I'll pass you the baton.
Bobby's the
Oh,
boss.
thank you. So repeat. What actually is the question?
So the question is, you know, what would you say this new trend that you're seeing from these brokerage houses, how do you think it's going to affect both the retail investor and also, you know, these businesses in general?
Well, I think it basically promotes, I think, short-termism, amazing, more trading, which is where this market's been going anyway for the last several years. So hey, if you're a good trader and this makes you want to trade more and you're good at it, that's great. but I think it definitely takes away a little bit from the purity of investing.
Yeah.
I know, like I have friends that never invested before. They got you hear this Robinhood? I got Robinhood. I'm just buying stocks. And they have no idea what they're buying,
Right.
because they can do it commission free. So, but they might create opportunity for longer term investors or fundamental investors who go in there and start taking advantage of some of that maybe an experience. But there's one interesting thing I thought that might come good out of it, and it's because as all these firms you have zero commission. What are you going to be able to compete on now?
Correct.
Maybe it's service, maybe it's information, maybe there's better information now for the retail investor in the long run over time.
Maybe more OTC stocks available.
Well, I don't know if Robinhood actually trades smaller microcap companies. I think they might restrict that to some degree. So again, bad for us again. Yeah. But what was it?
Starbucks.
And for full disclosure.
Hell.
Okay, all right, just making sure.
I like my money. I love how both of those things have gone up.
Sorry, Maj.
But this is what I'm not buying though. I mean, I think Schwab says, hey, we're doing this because we want to improve the experience for our customers. Hell no. They're losing. They see the market share as an issue here. E-Trade has been around, I think, for 20-some years or 35 years maybe. They only have about 4 million accounts.
Right.
But great commercial. They should promote that marketing department. It's amazing stuff.
Robinhood already has 4 million. So this is all about, wait, we were, this is going to hurt. This is going to hurt. Last second, it hurt us.
Yeah.
Let me tell you something about those 4 million Robinhood accounts. I bet you the top 10% in E-Trade will match that 4 million.
Yeah. Well, yeah, but right now.
I mean, I wonder if a million might just be in crypto, but
Hey, listen,
we digress.
Just one share of Google does not make you an investor. Google's out that much a share.
But I gotta tell you, if they start allowing us to trade microcaps and they had great tools,
Yeah,
I could definitely see myself using that platform at some point if the executions were great and everything.
Right.
They do have
The data's really good, I think, on Robinhood. They have some interesting data.
They do. Sam, go ahead.
Sam, what do you think?
But that's how they make money, right? It's not really free. There's no such thing as a free lunch, right? So they make money by creating a market, and
Levels of
they don't give you the
trading.
best execution,
Right.
right? So that's the issue. So you pay for it one way or another.
Yeah.
And I think you probably pay for it more in a microcap stock. I'm guessing. I'm not 100% sure how that would
Patience,
work.
bro. The trade will be executed in the next few weeks.
But I think it actually makes more. So I just wanted to go back to a topic Chris brought up about super voting shares, and I actually think that there is some value to them in terms of, when you are public, because your investors are thinking so short term. If you have super voting shares, you can kind of avoid that noise in the short term and still have control and not have like an activist come and say, oh, you should sell this asset, when in the long term it'll be more beneficial for shareholders to hold on to that asset. And I think that in this topic also creates more short-termism, like Maj says, and especially if microcaps, small caps are allowed to trade, on these platforms that are free. I think it just creates more swings in the stock, both down and up, and I think that creates more opportunity to someone who actually studies the values of companies and sees that something go really far out of whack in one direction versus the other. And so I think generally though, like to give people more options and more visibility, because there's a lot of people who don't have that much money, and if you charge $5 or $8 on a trade and they want to have, I don't know, $1,000 in stocks, like that actually hurts them big time. And I think the fact that it kind of gives them access to some degree, even though it'll be riskier for them, is dangerous. But I mean, that's the type of stuff I think the SEC should go after and be like, hey, if you're going to be on these platforms, then I don't know, maybe it'll move the platforms. I think we were talking about it before about there being a different. What were we talking about at the MicroCap conference?
Oh, on the call we were talking about the long-term stock exchange.
LHC.
Just these new just exchanges really popping up that are trying to bring on more listings in a more different way. The idea being that we all play a different game on the same field. So the idea of wanting to play the same game on the same field, I remembered it.
And I think this could lead to this. Commission-free trades could lead to something like that.
Sorry, Seth.
It's okay. But I think it could lead more. It'll be more likely to lead to something like that type of platform or trading platform.
Gotcha. Chris, your thoughts on the topic?
Terrible idea, dude. I mean, look, haven't the brokers suffered enough, dude? I mean, like, they've destroyed this business, and now it's like, well, now that I've kicked you in the balls and, taken your wallet and your fake Rolex watch, I'm going to take out your gold tooth as well. I mean, look, I just don't, I don't like it. I don't like it because I have a lot of friends who are obviously in this category now. Business was already almost non-existent, now it's dead. So of course I'm biased and I don't want to get into the topic.
Fair enough.
But I don't think it's a good idea.
Fair enough. Anybody else have a comment on this topic before we move on?
You know what I've learned, you guys?
Okay.
If you mention any company, by law, he has to say for full disclosure to you own it. So I'm thinking about reciting the Dow 30, dude.
Chris, I've been doing interviews with you for 8 years. Please, for the love of God, do not do that.
No, recite the LD Micro Index companies.
Oh, man. All right, so my next question is, there was actually another podcast that just came out from the Stansbury Investor Hour podcast.
Oh, something
that was,
I listen to every week.
oh, I know you do.
Stansbury, yeah.
That's why I'm going to go to you on this. So the episode was titled "How to Tell If Companies Are Lying." So now I'm like, so in microcaps, this is crucial. So, what are some of the tells for you guys? Who wants to go first?
Go ahead, Chris.
Yeah, look at Chris.
Hiding underneath the desk.
For those listening to the audio version, Chris is now under the desk. So, Sam, let's go to you first.
I asked Chris what he thinks, who he thinks tells the truth, and who he thinks lies.
Dude, if I
And I do
that,
the-
I wouldn't be here.
And I do the exact opposite.
Even more successful.
What I try to do is you try to find multiple different sources who would potentially know the same information. So as long as they all kind of match the story, it helps. That's really the best way. It's kind of just like doing like a crime investigation.
Right.
That's kind of how I think about it. The other thing is just generally like, you go back and look at their past history, see what they've done in the past, and you could even do like criminal background searches on people, and just like generally like if a CEO has built a successful microcap company in the past and sold it, generally you can have more confidence in that, and they're probably more likely to tell the truth. And usually there's promoters who always tell you something's happening and they overpromise and underdeliver consistently. That's a good way.
I've got a great tip, Sam.
And then, I generally like people who underpromise and overdeliver. That's kind of how I look at it.
Got it. That was underpromise and overdeliver. Yeah. Okay.
I like that. Yes, underpromise. I don't like overpromises and underdeliver.
Yeah, fair enough.
The LD mantra.
Unless you're going short.
Yes.
Unless you're going short.
Maj, what do you think?
Yeah, I think I agree with everything you said there. Look, I like to really drill management as much as I can for as long as I can. So with the last company, for example, I just recently had bought. I must have interviewed the CFO and CEO separately. I like to do that at least 6-7 times.
Cross-examination.
Yeah, are they answering the same way? If you start learning things, keeping your journal again. As you see what they said in the past, compare conference call transcripts to press releases. One of the best areas to look at is in the SEC filings, the liquidity section, where they talk about they have to raise money. If he's telling you on the phone they don't have to raise money,
I didn't even
and
know
all of a sudden, and he's telling you, you say, oh, wait, you just said you had to raise money in this document, but you're saying you don't. What's going on here? So you just try and it's like a chess game, man. And then you also learn, keep that journal of those management teams that have lied to you in the past, and so you understand that, and that
my book is deep.
It's deep. And
It's like Crime and Punishment. That's how big it is.
Yeah, I had one guy. I was interviewing him, and it was a SaaS company and an email marketing company, and the stock was selling at like incredible low valuation, and it just turned out the CEO was just he had gone through 3 or 4 different already turnarounds, the same CEO, and failed every time. And everything was telling me about this next turnaround. I just didn't believe any of it, and they ended up going down.
He still has a job after the fifth iteration.
Yeah, that's crazy, right? Yeah, so didn't even know anything about his margins. So how tight are they? How tight is that management team on everything you're asking them?
Got it.
And you get to learn these things over time.
Right. All right. So Chris, what are some of your thoughts? You were on our
if
conference
the dude
too.
has a mustache, we're probably not making any money. Okay.
Wait, any mustache? I mean, even the twirl up and the twirl down?
Listen, gray hair going to 0. Okay, I don't know what it is. There's just look, the big question here is it someone being dishonest or someone being overly confident?
Right.
Okay? Because if you can tell me, it's like, Chris, can you deadlift 400 pounds? I'm like, absolutely. Okay? But if I fail, was that me lying to you, or was that me just being unsuccessful? So you have to, I don't think anyone, well, I gotta be careful, because we're in MicroCap. I don't think most people would be dishonest for the sake of being dishonest. They just have something in their head that they feel that they can achieve, and they don't. In the end, as an investor, if they fail, you fail too. So exactly what these guys said, and I think culturally they're really good at it, okay, culturally, because we cross-examine relatives all the time. I was like, where were you last week? Oh, the 7-Eleven. The one on Pico or Lincoln? Okay. So, sorry, that was a little joke for all our homies, SoCal.
Our LA people out there.
Yeah, that's right. South Santa Monica, raise up. Let's go back. So, going back to this, you have to. What I have learned, without giving any secrets, because there's some very influential people in this room, without giving any secrets, the trick is you want to go to the bottom of the totem pole and you want to go to the top of the totem pole. And you want to see where there's a disconnect. There are very, very few companies, okay, that have been aligned from the bottom up. And, you know, I think that anytime there's a lot of synergy there, or where everyone's kind of gung-ho about something, you're going to be successful. But the reality is that most of the companies in MicroCap are really relying on 1 or 2 or 3 things to happen to be very successful. And they can ultimately factor the percentages of success incorrectly. So the story is, there was one very prominent hedge fund manager in San Francisco that told me, well, how do you know those are the percentages that they're going to have in being successful? And the reality is, what the CEO or CFO are expecting and what the actual reality is a far different number. And I think that's the reason why there's been so many microcaps that have not been successful. They just did not factor the risk, or they were overconfident in thinking that that deal was going to get done.
Right. Got it. I mean, so before we get to the Q&A, I had one follow-up to this question, and that has to be, you know, there's a lot of work, obviously, that goes into really assessing management and if they're capable of really recognizing even more shareholder value. But at what point do you have to kind of stop yourself? You're like, you know what? I think I did enough due diligence on this. Now it's time to make a decision. Does that ever stop? Or, I mean, you guys have been doing it a long time, so I'm sure you have your quick ways of telling, like, okay, yeah, no.
It's the comfort that you feel within.
Gotcha.
You know, one litmus test that most executives fail is, would I trust you with my house keys? That's a hard one. Very few people pass that. Not even my own father qualified for that test. But that's the thing. It becomes a trust factor. Is, do you, based on all your knowledge and understanding, would you trust these guys with your money? Another tip that people may use is, you know, would you buy this, you know, whatever investment you're making, would you buy this entire company if you had the money at this specific market cap? So for me, whenever that's a yes, you know, with a lot of our companies right now, $30 million, would I buy the entire thing if I had control? Absolutely. That's another way. But again, everyone has a different way of getting there. You can't, all 3 of us are going to be completely different on this.
Yeah. Sam?
I think it's going back to just like performance. Like, are they able to perform well? And those CEOs or executive teams I end up never talking to again. I just own shares, and I own them for a long time because they understand capital allocation, and that just creates huge value over time. And as time goes on, time is on your side. And so those are the best companies that you just kind of own. You hope to get in at the right price, but sometimes you don't even care what price you pay for those companies. And then just like kind of an anecdote, the portfolio manager in New York once told me that he would never invest in a CEO that has expensive jewelry on, and then he would also never expect. So I don't look at this stuff, and he would also never invest in a company with a CFO who was very overweight, because he said that if they couldn't control their appetite, how could they control the?
Dude, this dude was also heavy. How can you say that shit? This is just plastic.
So that just shows you like the type of stuff people look at, you know, and think about, and you know, what. Like Chris said, whether you trust someone with the keys to their house, and it's like that's how do you there's no way to quantify that. That's just the feeling he gets. But what Chris does that I think is
Brian passes by.
What Chris What Chris taught me, that like one of the times I visited a company with him, Chris talks to everyone at the company. He'll talk to the janitor all the way to the CEO.
I like the janitor more than I like the CEO.
Yeah. and what I've learned is that like people like the secretary, like admin assistant, things like the gatekeepers are really the ones that hear everything that goes on in the office. So I found it really good to like generally befriend them, and you just never know. Like when you call, like they'll help you get to the CEO a little easier, or just get little things like that, little tidbits like you can sense their mood, and that's the other thing when it comes to management as well too. Like once you've talked to someone a lot, you can kind of get a sense, like, are they excited when you talk about the business? Does it get them excited and happy? Or are they like, no, they don't really feel like talking about it as much? And there it's like, once you have that kind of base level of where someone's like attitude and emotions are, then you could somewhat use that to some degree as to like where they are in their business life, I guess, in a way.
Maj, your quick take on this?
Yeah, I mean, one of the first questions I'd like to ask, the management team is, what have you gone through in the past where you failed and met that challenge, and how you succeeded from it, how you come from it. And the more I like investing in companies that have gone through trouble, had to meet those meet those challenges, and they came out okay with it. That's another thing in their journal that they've learned. And the more of that I see in some of these teams, I love that. And that gives me the confidence to say they're not always going to be right. I'm going to probably hold one of these companies that's going to have a misstep, and I want to be confident that I can trust that they'll be able to drive the ship after that.
I like that point. Hold on, real quick, Sam. I love that point because I was actually just at a conference recently in a presentation, and one of my favorite things I saw a CEO do in one of the presentations was, if everything were to fail, what are some of the risk factors that would actually lead to that? And they did that in their public presentation. I thought that was brilliant.
At what point, Maj, do you think though, like, they keep failing
over and over? Let me really retool that. I don't want like 10 failures.
Okay.
But for example,
how many in a row? Is it 3 strikes and you're out?
It's like, I like to see some of my favorite ones. I to invest in a company that's just recent.
So Cass Medical, CASM, it was bought out earlier this year.
Yeah, Cass Medical. Yeah, I was at
By
your
right?
conference. I found it. Yeah.
Course, yeah.
And then it was Data Watch, or was it WCH? Yeah.
That was kind of a
All right, we got
takeover,
we have a
under.
few disclosures that we have to
I don't
make.
know. They're taking over. They're bought out.
I'm just making sure.
So, do you understand the changes they made to create success?
Yeah.
And no, I don't. If I interviewed a team and they've had 2 or 3 problems, I'm probably not going to invest in the company. But so for example, when I found those 2 companies or came across them, at your conference, I'll give you a plug. It was a situation where he admitted that he was basically overpromised when he first came to the company, and that he didn't anticipate things. But then he proved that he got there. It took a while, but he got there, and didn't make that many mistakes on the way after that first mistake. So I was really confident in the company at that point. But so things like that. But if the other example I gave you earlier about the SaaS company, he got to 3, 4, 5. So I didn't invest in the company.
Right.
So it's about that. I wouldn't if I've seen 2 or 3 failures.
But you're also a value guy, right? So like Data Watch, for instance, I didn't follow it too well, but my understanding it was much higher at one point. And I don't know what happened, but he made a mistake or whatever, right? And it got cheap enough where then it got acquired. And if it never got that cheap, it probably wouldn't have been acquired, right?
Well, Data Watch,
He sold out though.
This was the D and LD Micros, one of his largest positions, one of the most long-term positions. This was a $3, $4 stock for over 15 years. And then they basically caught lightning in a bottle, and it became a SaaS company. It went from 3 to 30. And everyone had these like illusions of grandeur, and none of them materialized, and you sold the stock at $6, $7, $8 a share. I don't remember what the exact number was, but it wasn't anywhere near the all-time high.
$13, I think it was 13.
Yeah, there you go.
Yeah.
So look, I mean, again, I think everything that these guys mention is on point. I mean, there's a little physical tells that you can tell every here and there, but I think a lot of it is just conversations. It's like a first date, a second date, a third date, a fourth date. Someone actually taught me about that. It's like, in terms of interest level, in terms of enthusiasm, in terms of energy, in terms of things that were said that were, kind of, it's not the same thing anymore. But all it is a lot of homework.
Yeah.
And what I think that I've been trying to do more often that's been actually hard is try to talk to more board members.
Right.
Because board always likes to hide under the, under the curtains. I love to bring them out. Come on out. I'd love to talk to you. And it's just very interesting to see, bless you, I just love to hear kind of their perspectives and what they think about certain people, et cetera, and so on and so forth.
Got it. All right, so we're at that point where I want to get some Q&A from our audience members. So does anybody have a question for any of our panelists?
Please say no so we can all go to speaking. Wow.
Question from the audience was, how often do you make investment decisions based on the fear of missing out? FOMO.
I would say that, like, if any of us said we never did, that'd be
That's
a
a
lie,
lie.
right? And I think we try never to.
That is the truth.
In reality, the way I see it myself is that I think that, especially I think like, I don't know if you talk about it much, but like info arbitrage, where you find a company puts out a press release or they have a quarter or they say something on their conference call, and you're like, well, that should have like moved the stock in a way.
Exactly.
Or to me, it moves the valuation of the company, predominantly higher, and it just doesn't move the stock. There, I feel like I try to get in more quickly, and that's out of FOMO of being forced to pay a higher price later for the same company. So, but sometimes I'm wrong. Like I've had instances where I find a company that has a hidden asset, and like one of them just recently sold, and it didn't move at all.
That hidden asset gets buried with all the liabilities. Yeah.
No, but I mean, I still don't get it. I'm like, at some point, I think like maybe they have to show that they have a gain on their next quarter. Maybe, I don't know. But like I've been holding the stock for like 3 years, hoping that they will sell this asset. They just sold it, and I thought they would get like $5 a share for it. They end up getting $2.50. The stock's at $9 and it hasn't moved.
Yeah, because there's nobody left too. After a while, people just get sick and tired and they go to other places. I mean,
but they're going to get cash. It's going to show on the balance sheet. They're going to pay off a lot of debt. So at some point, I'm hoping, now I hope I see the light in the tunnel potentially. But I mean, I was like 3 years early on that investment because of FOMO to some degree, so.
Very little, but it's like one of those things where you go to like a casino in Vegas and, you look at a horse, it's like, man, that's a nice horse. It's a beautiful tail. I'll put $5 on it. Let's see what happens. So it's more of a spur of the moment thing, but ever since I've been married and had a child, less so. I just see myself being tighter with these things, and usually when it comes to that stuff, it's very hard to predict, when you're going to sell it to. So that's why I usually don't get involved.
Yeah.
Maj?
Yeah, I find that I do a lot less of it than I had done in the past. When I was in the 90s, I owned like 300-400 stocks, so that's FOMO. Yeah, but right. I read Peter Lynch's book. Yeah, it's cool, but because he was the same way. But now I own a lot.
Living FOMO, yeah.
Probably less than 20 stocks now, maybe, or maybe less than 30 stocks. But it's natural to have that kind of desire to do that, and I find it to be a lot of times a zero-sum game for me. So I try and do a lot less, and really put more money in great stocks that I think are going to do well long term.
The one thing that I've tried to learn from FOMO, like the opposite of it, is that if you sell something too early and it keeps getting more expensive, I don't get as upset as I used to that it got more, the stock went up afterwards and I didn't hold on longer.
Because you made some initial money.
Yeah, and so, but it feels good. But I mean, like, I don't know, like Taser, for instance, right? Back in the day, like if you sold it at what you thought was like a reasonable valuation, but then it went way, way, way past that, right? And so there's some people who can hold it longer, and they're willing to hold it longer, and good for them. But for me, it's like once it hits what I truly believe a company is worth, then I'm okay selling it, or a little bit premium to what they're worth.
Right.
So, and I do not own Taser, or what is it now called?
Yeah, Axon.
Axon. I do not own Axon.
I got to tell you, those guys. Look, all I can say about the Taser guys, the Smiths. They did a great job. I mean, this was a $12-15 million market cap back in 2002, and it's now several billion. So hats off to them. Mm-hmm. But I thought it was kind of interesting. I saw them at CES once, and they were literally wearing NASCAR uniforms. Okay, and this was like their MO. So look, if you have a bad idea, make sure you keep that bad idea to yourself. They made everyone in their staff wear these NASCAR uniforms. And I was like, why the hell are they doing this? It's like, well, the guy who was working there was like, I don't know, but I know that it's a legitimate tax write-off if you have dry cleaning and it's your uniform. as opposed to something else. So look how advanced they're thinking that they would wear something gaudy just because they know that it's going to be true. And for full disclosure purposes, I never verified whether that was true. That was a good story to tell.
That is good. So we got time for one more question. Anybody?
I like this idea of independent verification when a CEO tells you something and you get the scuttlebutt from the janitor or whatever, sort of verify, hey, what they said, that's actually true. So when you're trying to do that, but you're looking at a company that has maybe some complicated technology or something that is way out of your realm of understanding, how do you know how much research to do, and when do you say enough, I don't understand everything about this industry or company, but I'm just going to trust that the experts, what they're telling me, is there. Maybe there's this billions of dollars of tangible market, and yeah, actually we're going to get it because this technology is awesome.
So straight up, most disruptive technology in MicroCap?
Hold on. Brock, give me a shortened version of that question.
How much is enough due diligence on complicated business or technologies?
One more time. How much is?
How do you verify when it's like extremely complicated or extremely tech savvy in something that you don't understand? Is this question?
Like a biotech or a med tech or a tech. Yeah.
Go for it. Go for it.
I mean, you really can't. It's a shot in the dark. A lot of this is just based off historical context. So what I've learned, being a microcap investor since 1996, is almost all forms of disruptive technology have failed, and maybe one or two of them have come out of the gate. So what I do with any disruptive technology is I simply buy less of it. And in the process of buying less, I spend more time doing due diligence to see if what these guys believe is going to happen actually does happen. But that's the risk that you take as an investor. Why do you think restaurant stocks are the most popular companies at our conference? Because at a restaurant, even though it's kind of a crappy business, you can taste it. You can go sit down. The level of understanding is not that vast. So, and when you mention experts, I mean, experts are wrong more than they're right. So for me at least, when it comes to this stuff, the indicator that I look for is who are they partnering up with, okay? So we have a private company, and right off the gate, they've done less than 10 million revenues, but Samsung is a partner, okay? The largest foundry in China is a partner. The second richest man in Malaysia is an investor. So you kind of look at that and say, well, look, I mean, these guys, look at their access, look at their track record. That's how I kind of go about it. But it's a really good question. I mean, it's hard to fathom.
But those guys, even though they're like a partner, right? It's such a small dollar amount to them that they could care. Like, if they're completely wrong, it doesn't move the needle for them whatsoever.
But let me tell you what I learned, because I'm a huge reader of Barron's. I think that everyone should read it. There was this woman who was managing a med tech fund, and she had outperformed 99% of her peers. And I don't know if this was deliberate or not, but she said the one area that she spent most of her time was on Facebook forums, where people are using all these new technologies and kind of getting a feel for how they're living, or whether it's helped them, hurt them, blips on the road, things of that nature. So I'm sure that no matter what your specialty is, there's going to be something online that really is only focusing on that technology or that specificity. So that's just try to get it as close to the source as you can without touching it. That's my advice.
Maj?
Yeah, that's great stuff there. And I just think if it's too complicated, at some point I'm just not going to look at it anymore. And I think that's really the key. How much can you understand the business where you feel comfortable and understand there will be unknowns. And I think a lot of that is really we're trying to understand everything about the company, how they make the product, or how they sell the service, how the customer reacts with the engages with the company, how companies get their contracts, who they deal with. So all these things are really important. And if you don't understand all those little parts of it, the more you don't understand, the more risk you get yourself into. So I really try to. There's so many stocks out there that there's enough we can understand really, and what he said about going to the internet, and there's so much great stuff on the internet. You can really do you can learn so much about a company you had nothing did not know you could ever think you would be buying.
No, my allocation of time is one of the greatest things that you can have. And it's really an art form. So I think a lot of it is just directly correlated with how long it'll take you to get the answer that you want.
And how obsessed you are about it, right?
Correct.
Yeah.
Yes.
Cool. So I think we're about to wrap up here. Before we go, where can our audience go and find more information about each of you? Sam, start off with you. And your social media.
Go to ridgewoodinvestments.com. You can email me, Sam.
What's your Instagram handle?
Yeah, what's
Is it
your
at
Instagram
Namiri?
handle?
S. Namiri.
Ooh,
At
I
S.
didn't know you
Namiri.
had one.
Yeah.
Just getting into it.
And then, email me, Sam at ridgewoodinvestments.com. Pretty much it.
Cool.
Look, please don't contact me. I got enough crap on my
the
plate,
reverse
dude.
psychology.
Yeah, I'm not telling you. I'm not even telling you my website, man.
ldmicro.com.
Yeah, no, don't, please.
Yeah.
Just, you cannot come to the event this year.
That's some reverse psychology.
Yeah,
right
no.
there.
That's good.
There's no reverse psychology.
Tell them they
Bill
can't
is
come.
invited, no one else.
Raj.
It's at geoinvesting.com is my website. My email is maj@geoinvesting.com. And it's a premium website where we offer research to our members for a fee. Twitter handle is at Maj Geoinvesting, I think, yeah. Maj
And he
Geoinvesting.
also serves as the Sunday DJ at the local barbecue joint here in Austin. So you can
That's true. I hope you brought your
Spinning
guitar.
records.
type of barbecue joint.
All right, guys, I want to thank you so much for joining me on this panel today. I really do appreciate it. And again, to the hosts of the MicroCap Rodeo, the Issuer Direct team, as well as Wiley, Rod, and Evan. So again, guys, thank you very much.
Thank you.